Let's take a look at some charts on Bitcoin from this week's article on Brave New Coin. So there's a lot of data here, a lot of charts. I wish that I could analyze every coin the way I can analyze Bitcoin. Bitcoin's benefited obviously from being around for more than 10 years. So it's got a lot of just ancillary websites that look at the data, look at the chain, reliable stuff. It's proof of work. So we can look at hash rate, difficulty, block time. We can look at NVT, MVRV, unspent UTXOs, transaction outputs, stuff like that. Lots of stuff we can analyze here. So if we start with the least valuable, which is market cap, Bitcoin's been in no threat of being decrowned by any other coin. You can argue about XRP and circulating supply, but at the end of the day, no pre-mine should really compete with a proof of work chain, because I can pre-mine 10,000 billion coins, sell one to myself for $1, and then my market cap is greater than the heat death of the universe, whatever you want to say. I mean, that's just the way XRP works. It's interesting here, Link. I don't know why, like, Tezos isn't on here because I can't add it. Sometimes it just doesn't show up on TradingView. I don't know what that's about, but Link has sort of surpassed all the other low-high caps very quickly. It's interesting how we had, in biology, it's called niche specialization. You know, if you put bacteria in a test tube, it'll separate out between the high stuff that wants to live at the surface, the stuff that's anoxic and wants to live at the bottom of the test tube, and there's some stuff that's in the middle, wants to live in between. So it's generally what we see with these coins, even though they're not related at all by market cap. Link is not related to LTC at all, but yet it sort of correlates a little bit. And you can see these correlations breaking recently. And there's lots of arguments about when correlations break, we're generally in a bull market, because things move independently in a bull market and they move together in a bear market. So Link's outperformance is generally just a bullish sign for everything as a whole, including BTC. If we look at hash rate and difficulty has been wild since the halving. A lot of this is because of the halving. So the block reward got cut in half, and any inefficient miner gets deeply not in profit at that point. But at the same time, we also have new ASICs coming online that are improved efficiency, so they're sort of picking up the slack. And at the same time, we have price going all over the place, and that's going to deeply affect things, just like it did in March. Miners are going to turn on and off depending on if they're profitable or if they can operate underwater. But even after March, even after halving, we are sitting very close to an all-time high, or at an all-time high currently. Difficulty as well, very close to an all-time high. I expect this to continue to increase, especially with 2 more ASICs coming in October. So nothing too crazy as far as expectations are concerned. This just should keep going. As long as more ASICs are being created, hash rate will go up. If we look at block times, you can see how wild they have been just this year. For the most part, aside from late 2018, block times were hovering below 10 minutes, if not closer to 9 minutes. And you can see with the March price change and the hash rate fluctuation, how that's changed block times. And that's happened a few times. So block times have been all over the place recently. And just this week we had a large area in China, Sichuan, if I'm saying that properly, received a ton of rainfall. A lot of mining farms got destroyed. There's a lot of mining farms in the region. So that's also going to affect hash rate. Things like natural disasters or weather. Ironically, there's a lot of mining activity there because of, from what I understand, the cheap hydro power during the rainy season. But obviously that can have a devastating effect if there's too much rain. If we look at Bitcoin's disinflationary stepwise halving schedule, you can see we're still quite early in the schedule. This goes out to 2060. 2024 is currently the next halving. It's being moved up slightly as hash rate increases, so it's being projected for February 2024. I mean, we may even see halving in 2023, late 2023, which would be super early. But we're at a point currently where price hasn't quite caught up to the decreased supply. I mean, we're seeing it slowly. It'll take months and months and months for this new equilibrium to set in between supply and demand and price. But I think we're getting there. We're starting to see those effects. And inflation is around 1.8% currently. So a list of all the ASICs, and you can see there's 2 more coming in October. We had a bunch in May, 5 within the past year. They're heavily in profit at this point. most ASICs are in profit. This is at 4 cents per kilowatt hour, which is what most miners at scale get, if not cheaper. So if you're getting less than 4 cents per kilowatt in electricity, you're making more profit. Obviously, you got to factor in things like hardware costs, overhead costs, employment costs for workers, stuff like that. But this is just bare bones based on electricity. There are no threat of shutting any of this off currently, as long as price stays the same or keeps increasing. And as long as hash rate stays the same or decreases, this profitability will remain intact. Now, I said I expect hash rate to keep increasing, so profitability is going to decrease slightly. But overall, these top newer ASICs are going to remain in profit, I think, for a long time. If you look at transaction counts and average transaction sizes, the weekly transaction count has basically held above any pre-2017 high for the better part of 1.5 years now. It's definitely a different network activity-wise than it was pre-2018. And we'll see that more with the active addresses as well, but this is incredibly bullish to see transaction counts refuse to decline. Lots of on-chain activity. Average transaction sizes remain between 5 and 10K, just ranging here. I also think that's pretty bullish. Obviously, price is going to play a big factor in average transaction sizes, but that just means activity is hot. People are definitely using the network regularly and with vim and vigor. If we look at the unconfirmed transaction counts, these have also increased on peak times. You can see we had a few areas between 70 and 80,000 unconfirmed, but now we're seeing more unconfirmed transactions more often. This isn't quite Ethereum bad, where it's 150K unconfirmed transactions that are being kicked out of the mempool because they've been there so long. So in general, how this works, if you don't send a high enough fee, your transactions will wait behind the line of other transactions that have paid a higher fee. And if you pay a low enough fee and it's in the mempool long enough, it just gets kicked out. So you can see you can pay these zero fee transactions or very little fee transactions. You can pay that, but you have to wait. In Ethereum's case, a lot of these transactions are getting kicked out and getting sent back to the original sender, basically saying you have to send a higher fee or wait longer. So you see that with Bitcoin as well, it's just not as dramatic. If we look at block sizes, purple, pink here is anything above 1 megabyte, basically. And you can see the block sizes have just been dominated over the past 2 years by very large block sizes. Again, this just says demand is massive ever since Segwit. I just like how this graph looks, even though it might not be too informative. It shows where block sizes sort of maxed out when Segwit was activated, and it shows Segwit adoption, because anything above 1 megabyte should be Segwit related transactions. And you can see that's most of the chain now is greater than 1 megabyte. Here's another way to look at block size and fees. Again, here's 1 megabyte block size. That was the previous ceiling, and we're living way above that at this point on average per day. Fees, despite block size increasing above 1 megabyte, have remained relatively low. Historically, they're about 250 right now. Kind of where we are for sort of peak activity in general, I think, compared to like 2019. Scaling is getting better and better. More people are using batching, more people are using Segwit, which collectively just means we're going to be able to send more transactions with a bigger block size, and fees aren't going to explode as dramatically. We're just using more efficient methods to send transactions now. Here's, to me, the most impressive chart for Bitcoin fundamentals is the active address count. It's nearing all-time highs, and price is honestly pretty close to all-time highs. The difference between 12 and 20K isn't as crazy as it sounds at this point. And if active addresses exceed previous all-time highs, I expect price to easily exceed all-time highs. This is just supply and demand thing. So an active address is an address that has changed value over the previous day. So this is just raw demand for a lot of people looking at this metric, especially legacy people. They love this chart when they're talking about buying and selling. And it's a really good metric to look at. You can see when active addresses dropped off a cliff in 2018. But right now they just keep rising. NVT, I kind of have a love-hate relationship with. It takes a lot of caveats and massaging, I think, to be useful. This 90-day average is like the average of an average. It still has been rising since 2016. I think this is inflationary related. I don't actually know for certain, but if I were to adjust for inflation, I think this would actually look flat. This looks more bearish than it is. A rising NVT says that the market cap is overpriced based on on-chain utility, on-chain activity. So to see NVT rising to sort of multi-month highs, almost 2-3 year highs here, wouldn't be bullish in a vacuum, definitely not. But seeing active addresses just on a rocket ship ride is extremely bullish. If we look at MVRV, which is another one of these metrics that compare on-chain utility activity to market cap. In general, the highs in MVRV have been highs in price. They've been bubble highs or local highs, local all-time highs, that sort of thing. And you can see we're nowhere near 8, which is the Z-score, like top 7, 8, 9. We're below 2 right now, so that just says there's plenty of upside here, plenty of potential for a pending bubble, a brewing bubble, whatever you want to say, a nice bull rally, bull run, multi-week, multi-month. You can see it took 2 years basically to go from the lows to the highs. So that would bring us to 2022-ish or 2023, something like that, if this bull rally continues. Similar things occurred in 2012 to 2014. MVRV spiked twice in that period, but very similar sort of pattern. This is unspent transactions outputs. The blue represents outputs that haven't been spent in 5 or more years. You can see it's slowly growing. Most of these coins are probably lost forever. Some of them are probably sitting in custody or cold wallets, but most of them are probably just gone forever. The warmer colors are coins that have moved recently. And in general, when the 1 to 3 month slice is 15% or more, we basically hit a local high in price. Despite price being at 12, 13K, 11K, basically where the last local high in price was and the last local high in the 1 to 3 month slice. The 1 to 3 month slice has been decreasing over the past few weeks. It's down to like 7%, 6.5%. So this is just another metric you can use to look at on-chain activity based on who's selling. If there's a lot of people moving coins, you're generally not moving coins if you're selling. Or if you're buying, you're generally moving coins if you're selling. So if coins are moving, that's generally bearish. This is CME Bitcoin futures, and really all you need to know about this is open interest is at an all-time high. Daily volumes are near all-time highs or at multi-month highs. So there's a lot of institutional activity here. This is in the billions at this point, 1 point something billion. So a ton of volume, kind of dwarfs a lot of crypto exchanges on a day-to-day basis. If we look at the contract dates, which have a high impact on Bitcoin volatility, just because of the volume, a lot of volumes being sloshed around. August 28th is the next rollover period. Usually it's a few days before that you see lots of volatility because a lot of this open interest is deciding to close their contract, to roll to the next contract, to short, but it's always a decision point. Like you can't, the contract date is the contract date. So you can either buy the next one, auto roll it, but it forces that volume to do something, right? So there's usually volatility around that date. And any of these dates coming up over the next few months, always important to pay attention to. Here's Backed, which is a physically settled as well as a cash settled market. You can see they started kind of at nothing and sort of hovered around 40 million or less volume until recently. Volumes exploded, open interest exploded, still like 1/10 of the CME, but it's just another institutional on-ramp, another avenue for people to get exposure who aren't crypto natives. I especially like that it's physically settled because that means it's not rehypothecated or just it's not paper BTC, it's physical BTC. Some more volume stuff. This is local Bitcoins. And North America is the orange slice here. Africa is the pink slice. Those are the two largest. Then you have Latin America, Colombia, Venezuela in here as well, up in volume. So to see local Bitcoins make new all-time highs, not all-time highs, new multi-month highs, is just another metric to add to. We're seeing a lot of activity here in trading volumes, in institutional and like grassroots, just mom and pop type people buying, getting into the market globally. Google trends have been sort of unexciting over the past 3 years compared to the bubble. Definitely little peaks and troughs here, but nothing too crazy. If we zoom in on the past 2 years, activity basically has not exceeded mid-2019, which kind of makes sense. If price hasn't exceeded 2019 highs, you're probably not going to see Google trends exceed that. All right, let's get to technicals. Bitfinex long short ratio, VPVR, yearly pivots, 50, 200 EMAs, volume, and RSI. First thing I always look for when we're pushing highs is how's momentum? Do we have higher highs on lower volume? Do we have higher highs on lower RSI? We do here, so there's definitely a bit of a bearish divergence, which suggests waning bullish momentum. We're also bear diving into a yearly pivot, which I don't like seeing as far as continuation is concerned. Typically, we just, for any chart, if we're bear diving into a pivot, we don't shoot through that pivot the first time, typically. Especially watching this local high here at 13 from 2019. I think it's going to take some reconsolidation to get there. But overall, this looks incredibly bullish. We're above, I mean, this is it for upside as far as resistance, 13 and 1920. And VPVR sort of tells that story. There hasn't been a lot of activity here historically, just ever, right? So we're very nearing price discovery. I think it's going to take 6 to 12 months probably to get through all this, but it does look very good for just continued markup phases, continued upside. I mean, we saw a 40, 50-day consolidation breakup. We're seeing a 20-day consolidation breakup, and that's exactly what you want to see if you're bullish. The 50 and the 200 have been crossed since April, so plenty of reasons to stay in a long trade since then. 8100 is the yearly pivot below us. 10.7 is the 200 EMA. So these levels together, there's plenty of support here if we decide to reverse in a strong fashion. Nothing too exciting on Bitfinex OI here up top, but it isn't that long. If we look at the cloud, kind of a picture-perfect way of trading the cloud. You had your Kumo breakout. We had the move up, reconsolidation. We had the TK bearish cross, which tells you to get out of your long. And we had the TK bullish cross, which tells you to reopen the long. This is, again, exactly what you want to see. If you're bullish, this represents multiple markup phases. You can see the failure of a TK recross above the cloud. In early 2020, we had this Kumo breakout, consolidation, retested the Kijun, and then, fell off the table. Here's the bearish version of that. You get your bear move, mean reversion, and then decision time, bearish TK cross, price goes down. So what we're seeing here is an expected bullish continuation move, especially with the bullish TK cross above the cloud. Cloud looks great. I don't see any massive TK disequilibriums, nothing like that just yet. What I mean by that is the TK lines, when they spread apart like this, typically means price wants to mean revert sooner rather than later. If we look at the weekly cloud, we're getting an event that hasn't occurred since 2017, which is a bullish Kumo twist. And you can see how 2017 projected us like 3,000% price appreciation. In 2016-2017's case, price had this bullish Kumo breakout, and then it reconsolidated at the Tenkan before eventually moving up. So this has a lot of time left on it for the ascent to begin, I think. 9K is basically the buy the dip zone for me. This was actually the Bitfinex hack. So there was a wick to the Kijun almost exactly. So like I always say with the cloud bids on the Kijun, you just never know. You never know when some random black swan is going to dump price all the way to the Kijun, right? So that could still be the case here. 3K down from 12 sounds insane, but that's where the averages are right now. It's going to take 6 months to a year for price to cleanly be above the cloud. But as we stand now, all of the cloud metrics are bullish on the weekly. Then lastly, just looking at the comparisons to legacy, any jumps in the VIX, which is a volatility index for legacy, have generally signaled bearish moves in price, as well as long-term lows in price. So we had the VIX hit its highest level since 2008, and BTC reached 30, 38, or whatever it was on a wick, some crazy number. So that's not really a surprise. What's also not a surprise is as VIX continues to decline or decay, price is bullish again, as was the case in 2018, 2019, not necessarily the case in 2018. But in general, spikes in the VIX have been excellent buy opportunities, and watching the VIX decline has been just a continued bullish move up. We're still highly correlated with SPX, highly correlated with NASDAQ. Not something I like seeing. In general, over time, we are uncorrelated, but we certainly have periods of extremely high correlation with legacy markets. So overall, we are bullish on almost every metric you look at. The weekly cloud tells me this is setting up for a multi-year bull run. Fasten your seatbelts. We're just getting started.